So guys, if you're watching this video, then you're most likely an unprofitable trader, or maybe a profitable trader that's looking for some simple tips to actually make you a better trader. You know, if you are unprofitable and you're watching this, these are just 5 simple things which maybe you don't already do in your trading that can help you, take that next step up towards becoming a fully profitable trader. Obviously, you can't just implement these 5 things and next week be profitable. It doesn't work like that. You're going to have to work, on your trading, on your strategy, on your risk management, on your psychology. Everything is all like this whole package to become a profitable trader. It's not something where you have one profitable month and then all of a sudden you're this miracle profitable trader. It doesn't really work like that. You kind of have to ongoingly improve yourself as a trader. So we're going to move on to step number 1 right now. Step number 1 is to journal your winning trades as you would journal your losing trades. So you'll see a lot of traders, specifically on YouTube, and they'll talk about how you need to journal every single trade you lose. And a lot of people would just journal random trades, especially in their backtesting. But in your actual live trading, you're going to want to journal your winning trades the same as you would journal your losing trades. The reason for this is you can learn so much from your winners. Obviously, you can learn from your losers too, because if you've made mistakes, you've entered trades you wouldn't normally take, you've maybe broken your rules. These are obviously trades which you can learn from, and that's quite simple. But if you're actually winning, and let's say you've had 5 losing trades in a row, then you have 1 or 2 winners in a row, how did you actually act when you were in these winning trades? Did you act differently to how you were acting when you were losing? Did you act exactly the same? Maybe it was just the setup which was different. But instead of just journaling your technicals, like saying, okay, I made 5% on this trade, went straight to my take profit, you need to journal how you actually acted during the trade, because how you acted during the trade is very, very important. A lot of traders will actually be profitable, but the way they actually manage the trade, their psychology throughout the process of actually entering the trade and actually closing out the trade, whether it be stop loss, take profit, or closing out manually, this can definitely affect your overall performance. The main differential which people actually see and question me about is the results from their backtesting differ drastically from their live trading performance. And this is simply because when you're backtesting, there's no real live money from a live account on the line. You're just clicking next on the candles on TradingView, and then it's either a win or a loss. So if you can actually perform like this, so it's either a win or a loss, take profit or stop loss gets hit, unless there's like a news event or the trade becomes completely invalid, there's actually no reason for you to close out the trade. So why would you close out early? So if you're actually noticing that you're doing this in your trades, when you had a few winners and you actually held the trade to the take profit, you didn't keep checking your phone every 5 seconds to see where the trade was at. Instead, you just went about your day, the trade was set, the stop loss was set, the take profit was set. Maybe you were acting like this. And if you're journaling your winners as well, you can see what you did right. It's all good seeing what you did wrong, but how can you do more of the things which you're actually doing right, which can then, obviously, if you add both together, these can make for a lovely plan in your trading, so you know exactly what not to do and you know exactly what to do to actually mean that maybe you have more winners in the future. Step number 2, this is to never trade if you are in a stressful environment, or let's say you have a lot going on, maybe in your personal life, in your financial life, anything like this. So trading is obviously very stressful. You're obviously managing your own personal money. Maybe you're trading for a prop firm. You're managing multiple 6 figures of capital. And even if you're trading for a full-time job, this can definitely affect how you actually trade as a result of your environment outside of just looking at the charts. A lot of people, especially people that DM me on Instagram, they're in jobs and they want to quit their jobs. So let's say they have a couple profitable months, they'll then leave their job and trading is now their sole source of income. So they have to make trading work, and they're kind of putting a lot of pressure on their trading results. They can't have 5 months of losing months in a row because they can't pay their bills. So this is putting yourself in a stressful environment when you're actually trading. You're getting to the point where you have to make money. So myself personally, if I'm trading and I don't see a trade for 2 or 3 weeks, it's not really the end of the world, because I have other income sources, I have money saved, I have investments, and it's not the end of the world. I don't have to make money every single week to pay my bills or every single month solely from trading. Whereas if it's your sole income, and it's kind of forcing you to enter trades which you wouldn't normally take. Your environment and how you're actually living your life is having a big impact on your trading results. Other situations are maybe you broke up with your partner, you've had some, bad news in your family, you've had to do something. I don't know. There's many different scenarios which this can actually fall under, but if you are feeling stressed, simply do not trade. If it's your main income source, it's very tricky, but obviously having other income sources and maybe focusing on that will actually reduce the stress in your trading, and also in the long run be better because you have that sort of backup plan. So if you don't make money trading, you have other income sources coming in anyway. Number 3 is set strict trading hours. Now this one's quite simple, and a lot of successful traders I know myself, people I speak to personally, they have this, set, and it's something that they just won't break. Myself personally, I'm exactly the same. I know exactly which hours in London session I trade, and once that cutoff hits, I simply don't even look at the charts. There's going to be situations where you're on the charts and you see a setup, it's out of your hours, maybe it's half an hour past your cutoff time, and you just want to enter the trade. The worst thing that can happen is you enter the trade and it actually hits your take profit, or you make profit from the trade. Reason for this is it reinforces that maybe you should just trade past your hours. You entered the trade, it's only half an hour after the cutoff, and you still won, you made profit. If you lose, this is good because then it just reinforces the fact that, okay, the hours are here for a set reason, and this is why I'm actually trading in these hours and not half an hour after or 2 hours after the time frame. The main reason I do this is because it kind of frees up the rest of your day. So I know from 8 a.m. to 1 p.m, that's kind of my trading hours. If I don't see a setup by maybe 11, 12, there's no point me actually being on the charts. So I know by 12 if I'm actually trading for the whole day. Obviously, you kind of have a good idea at around 8:30, 9 a.m. if there's actually going to be a potential setup. But to know for sure, you have to wait a little bit later. There could be a setup. But past 1 p.m, simply no trading for myself. I won't even look at the charts. Maybe I'll have the charts up and I'm doing a breakdown for the mentorship group. Maybe I'm filming a YouTube video. That's the only time I really look at the charts past the hours. Or maybe I'm just journaling my trades from the day before or the week previous. And this is what I'll actually do. And that'll be the only time I'll look at the charts after those hours. So you want to do this because you kind of know exactly what to expect. You know exactly when to be 100% focused on the charts and when you can go and do your hobbies or something else outside of trading, which we'll go on to. But I know that 100% of my focus has to be on the charts from 8 to 1. Let's say I have a meeting. I obviously won't schedule it during these hours. I'll schedule it after. So I know that my 100% focus can be on that meeting and not, side-eyeing the charts and seeing if there's any setups actually presenting themselves. I want to be 100% focused with every single task which I'm actually, doing at the time. And moving on to step 4 kind of ties into this. So after 1 p.m, this means that I can either work on my other businesses or take part in hobbies. So maybe sports, just anything really. You could like driving, so you go out driving your car, or you go go-karting, something like this. Or what I do is I play golf and I play tennis. These are good things which you can actually do. Train maybe a martial arts. Again, amazing thing for you guys to do. And when you're actually playing golf, when you're playing tennis, you're not going to be thinking about the charts. You're going to be thinking about, okay, how am I going to get this shot nicely onto the green? You're not thinking about, okay, did I leave that position open? Did I add a stop loss to my trade? You're not thinking any of this because you're outside of your trading hours, which means you have no trades open. You're not looking for potential setups. You're not checking your phone every 5 minutes for an alert. You know that your trading's done for the day and you can wait until tomorrow to actually start trading again, or maybe even a few days if there's no setups presenting themselves. It's simple. You want a hobby to clear your mind from trading. A lot of people will actually go away on weekends. They'll go to maybe like a spa place, or they'll go on a little road trip. These things are also good because obviously a weekend you're not missing out on any trading and you can get back to it on Monday. And maybe even just little breaks. This can benefit your trading, a lot. Splitting up instead of staring at the charts every single day for hours and hours and hours, just day after day. Okay, is there a setup? Is there a setup? Oh, I lost today, I lost tomorrow. It can be very draining. So if you want to take breaks, play some golf, play some tennis, go do whatever. It will definitely help your trading in the long run. And speaking about the long run, the last step number 5, is focus on long-term growth. The main thing which actually help people think like this is to treat your trading like a business. People often say, oh, I treat my trading like a business, but then they try and get rich quick. They try and become fully profitable, make 6 figures within 6 months, 12 months. But if you look at the stats, majority of businesses only actually become profitable after 2 to 3 years. So these people are claiming that they're treating their trading like a business, but they're not waiting or focusing on the long term to actually become profitable. They're kind of contradicting themselves. They're not waiting to become profitable. They're trying to rush. It's like a business trying to rush into profitability. It's not really going to go down too well. Obviously it could work. You could become profitable, but you don't really have the structure in place at like that short amount of time. The way I look at my trading is just how I look at my investing, my index fund investing. Those index funds, I don't really care how they perform in the next 6 months, the next year. All I care about is the long-term growth. So as long as my trading account in the long term is slowly rising, whether that be compound effect, whether that be just profits that I'm actually accumulating on the account, it doesn't matter. As long as over the year, 5 years, 10 years, it's actually still going up and I'm performing quite well, then that's all that really matters. I'm not really too fussed about how I perform. Obviously I want to perform well, but over the next 2 weeks, next 3 weeks, it's not going to be the be all and end all of my trading career. You still want to have your account after 5 years or 10 years. You don't want to start risking loads just to make a quick profit to say you've had a big month in trading. Just focus on the long term and you'll be set in your trading career. So if there are any tips which you guys think that I maybe missed in this video, be sure to comment them down below and I'll catch you guys in the next one.